Closer look at the markets last week. The financial markets were pretty quiet. Imagine a calm lake on a windless day. Not much was happening, but there was one event everyone was waiting for. That's the inflation report. It's like the big reveal in a mystery novel, and it happened on this past Friday morning. So, what did that report say? Well, it focused on something called the Core Personal Expenditures Price Index. Sounds fancy, right? But all it really tells us is how much prices have changed for everyday things that we purchase. And guess what? In May, those prices didn't budge. Zero change. Now, here's the interesting part. Over the past 12 months, prices have gone up by just 2.6%. That's just like finding out your favorite ice cream only got a tiny bit more expensive. The Federal Reserve, the folks who steer the economy, actually want prices to rise a bit more, around 2%, to keep things healthy. But this positive trend might make them feel more confident about doing something important, like lowering interest rates. Why does this matter? Well, think of it as adjusting the thermostat in your house. Lowering the interest rates can warm the economy, making it easier for people to borrow money and spend. And when people spend, businesses thrive, and the stock market, like the S&P 500, can do a happy dance. Speaking of the S&P 500, it dipped a tiny bit this past week, 10 basis points. Why? Some folks were worried about certain tech companies, right? The ones who are working on artificial intelligence. But guess what? Despite that blip, the first half of the year in the S&P 500 was like a rocket ride, up 14.5% growth. So there you have it. A week in the financial world, translated from Wall Street lingo to everyday language. Keep an eye out on those inflation reports. They're like the plot twist in the economic story. See you guys soon.